After a strong finish to 2023, South African equity markets had a disappointing start to 2024, losing more than 2% in the first quarter, as investors came to accept that interest rates will remain higher for longer. The South African Reserve Bank Governor has stated that he would like to see a consistent downward trend in inflation before the Reserve Bank starts to cut interest rates, which is now only expected to happen towards the end of this year. Economic growth figures for South Africa also came in at a very low 0.6%. Looking abroad, the ongoing crisis in the Middle East continued to escalate with little progress to a ceasefire. In the United States, it seems that we're in for another Biden versus Trump showdown, as America, like South Africa, heads for its election this year. Fortunately, our Sanlam Umbrella Fund has 3 protection strategies as part of a range of trustee-approved defaults to protect members against market volatility. These are the Sanlam Secure Strategy, the Sanlam Stable Strategy, and the Volatility Protection Strategy. Each of these strategies utilizes one of our smooth bonus portfolios underlying, or, in the case of the Volatility Protection Strategy, partners a smooth bonus portfolio with an aggressive passive portfolio. Additionally, each one of our umbrella fund's lifestyle strategies de-risks into the capital protection portfolio, which also utilizes a smooth bonus portfolio underlying, providing smoothing and guarantees to members close to retirement. These strategies provide various levels of guarantees and smoothing of the investment returns for our clients, with the Sanlam Secure Strategy offering the strongest level of guarantees to members, following this strategy until retirement. Smoothing of investment returns provide for a more stable and predictable journey to retirement, with members not having to be concerned with the impact of market downturns. We like to think of these strategies as our four-wheel drive solutions. The benefit of a four-wheel drive vehicle is to have more grip even when available traction is very low when driving on gravel or loose sand. The vehicle feels more stable, and its rear end does not slide back and forth in a way that gives you heart palpitations. Similarly, the protection strategies aim to provide stable and predictable investment returns, even in an environment of very low and sometimes negative returns. The journey to retirement feels more stable and secure, and members close to retirement do not have to nervously watch a market every day leading up to their retirement date. We achieve this stable journey by normally smoothing investment returns over a 24-month period, so that members are not exposed to such market volatility. When returns have been very good or negative, we reduce the smoothing period to prevent large surpluses or deficits to accumulate. We also manage the portfolio asset allocation carefully to prevent taking too much risk, while still providing sufficient exposure to assets such as equities to provide good long-term returns. One of the areas we have focused on quite a lot over the last year is our direct property portfolio. Here, we have decided to seed the Sanlam Property Impact Fund with some of the properties we have in these smooth bonus portfolios. Specifically, those office spaces that can be converted to entry-level housing units, as well as some of our rural retail centers. In the graph, we illustrate the gross returns versus inflation over the last 10 years for these strategies. All of these strategies have handsomely outperformed inflation over all the relevant periods, with the 1-year return benefiting from a strong finish to the equity markets at the end of last year. Firstly, the Volatility Protection Strategy has benefited from an additional exposure to the Satrix Enhanced Balance Tracker Fund, which is an aggressive passive portfolio. This passive component can add extra returns when markets are strong, but it can also lead to the strategy having occasional negative returns. You can see the benefit of this additional returns over the excellent 1- and 3-year figures. Over the last 12 months, this strategy has outperformed inflation by 5% gross of fees. It is important to note that the Volatility Protection Strategy does not provide a capital guarantee, but provide returns which are far less volatile than a normal balanced fund. Next, the Sanlam Stable Strategy provides monthly bonuses, roughly half of which are vesting and half non-vesting. In an extreme market downturn, Sanlam may remove some of the accumulated non-vested bonuses, although we have not done so since launching the underlying portfolio in 1986. This strategy provides a real return of 3.7% per annum over the last 10 years, with very stable and predictable returns over the period. The same underlying portfolio is used in the capital protection end phase of our lifestyle strategies. Lastly, we look at the Sanlam Secure Strategy, our most conservative option with the strongest guarantee. Sanlam can never remove or reduce any of the monthly bonuses once declared. The gross returns over the last 10 years have exceeded inflation by 3.3% per annum over the period. As with the other portfolios, strong equity returns towards the end of 2023 have helped a 1-year return. In closing, our smooth bonus portfolios have continuously shown their worth, especially in volatile and uncertain market environment like we're currently experiencing. These portfolios have remained resilient and delivered good inflation-beating returns while protecting members' capital. This is to ensure that members have a smooth, confident journey while saving for retirement.